Alrighty, what's going on, everybody? Today I got a good video for you guys. I have three topics that I want to go through to identify direction. The best way to identify directions in the market. So, firstly, I want to go through the daily time frame. This is where I look for the overall higher time frame direction. Secondly, I'm gonna go into intraday profiles to understand and to figure it out if the market is aligning with the higher time frame. And for the third, I have three examples of how I got into the trades using the confirmation and also using the daily bias. So without further very ado, here I have the here I have the first one. This is the daily time frame. As you can see, we start from the left, right? So as you can see, previous week took this range high right here, and it did close above, but it didn't continue. Instead, it traded back inside the range, and this week, this week, trading week, on Tuesday, it failed to manipulate this swing point right here. So this is the extreme swing point inside all these further swings. So whatever happens here, it's very important to price, right? Because that determines if price is actually turning around or is it gonna continue lower, right? So how I find the direction in this one specifically is how it closed below the further swing. And obviously, you can confirm this by going into the details. So basically going into the hourly time frame for me. Alright, so obviously I have a note here that I wanna to help you understand why this day on Monday it doesn't qualify this as a reversal day to basically look to trade it higher, right? So the reason why, like I said here, price in this moment, it reached a relevant point in price where a new phase of price is expected, right? New phase of price is from expansion to consolidation or to retracement or to reversal, right? Here it came from expansion to consolidation. The reason why it's consolidation is because it never displays back inside the range or through these highs, right? It just stayed here in the range. So the next day, the following day, the one that I want to go through, if you notice, I'm already looking for shorts because of this day, because of the closure of this day. On the hourly time frame, you can see that we also got a SMT with Nasdaq. So Nasdaq took the range high, and ES didn't. It also is trading above the daily open, so open high, low close. From this point on, when you see this manipulation happen and you see price coming back inside the range, moving fast, then you can trade it down into the previous day low, right? We have the consolidation, we have the range high, which for price to leave a consolidation, it has to manipulate it or it has to close through and break out. In this case, it took the high. Well, Nasdaq took the high, NES stayed below, and it traded back inside. Back to previous day low. That was the first one. See, failure to manipulate. How do I know that? Because it consolidated. So the next day, I'm looking for the range high to get traded into to bring it lower. The next one is, as you can see here, you have a SNT at this high, making this move down valid. In this case, right here, price did close back inside the range, but for me to look to trade this higher, I need to see the low being manipulated, but it didn't happen. What happened instead was the price created a failure swing. As you can see, it never took the low. Instead, it created a failure swing, and then it traded higher to this relevant point in price. Relevant because of the distance. When price got to this point, and obviously gave a reversal, gave you a valid reversal at 9:30. If you go a little lower, you can see what I have here. This is the key level, the most important key level in price. What happened here matters. What happened at market open? You got a very strong displacement back inside the range. You got follow through, and then I got the entry, and I took a low to these failure swings right here. So basically, I align the daily time frame, and then I look for alignment in the 1 hour, which is if price gets to this point and it gives a reversal lower, then now the intraday profile is now confirming the idea that I had from the daily bias, and the entry obviously is the second confirmation that I get on the order block, basically, for me. The third one is price guess to another significant level, relevant level in price, but it gives you a consolidation. And as you already know, again, price goes from expansion to manipulation, to consolidation, to continue the expansion. So that's what we see here, right? We look for relevant swing in price where we can expect price to continue the expansion, and that is at the low, at this low, because price is going higher, right? If it was the other way around, you would expect the high to get traded into to go lower. But since we're bullish, we want the low to get traded into so we can take it higher. Here you have failure swings. Right here, we took the low, previous day low, into a value gap, rejecting this high, not rejecting it, but not manipulating it. If you go lower, in the daily we're bullish, we're looking for bullish. In the daily, the open of the candle, or the daily candle, we want to see the low get taken, right? The previous day low get taken so it can give you reversal. That is what we got here, but we got a second manipulation at 9:30. I think it was 9 actually. But daily open, move low, so low, open, low, high, close. That's what we're looking for. I think, okay. This is a relevant level in price because it's the most is the most significant or the extreme of the range of this range. So whatever happens here is important because if it doesn't go if it doesn't go back into the range, then it's most likely gonna continue lower. So in this case, we did get a reversal, as you can see right here, CSD, and then we have a confirmation for the framework. So we went from daily bullish to 1 hour looking for manipulation of the lows to go higher. We got the manipulation, and then we got a CSD confirming the manipulation is valid and also confirming the direction. And then we have the entry model. In this case, this is mine. You can use whatever you want. I think, yeah, I have another one. Okay, this one is right now. This is the live market. But once again, relevant swing in price. Why? Because the distance between this swing point and this one. So whatever happens here is important because it tells you what the market is gonna do. So overnight, price got to it, and it gave a reversal. Reversal in this point is the swing point. This is I think it's the fractal model or GXT. It got to the relevant swing. Whatever happens here, I'm taking it as a diablo. I'm paying attention to whatever happens here. What am I going next? Going to the 5. Okay. Okay. So remember, this is a reversal day, so this is very difficult to trade because you are looking for this price. I mean, you're looking for something in real time. You're looking for the reaction in this level in real time instead of like looking for it after it happened. So like here, the reverse already happened, so this day is more easier to trade. In this case, price is still moving, so I'm basically predicting the reversal. In this case, I'm using the 4 hour to do so. Swing point, rejecting it. In this case, it gave you the CSD right here, manipulation, CSD, and then the entry comes after the CSD happened. My entry comes after that, and that is basically it. So in this one, did I align myself with the daily framework? Maybe, yeah, because the overall is bullish. So I'm expecting a reversal here so we can continue higher, right? So that's what we're getting in the 4 hour. Based on this candle, how it closed rejecting lower prices, or it closed rejecting the low or rejecting the follow through lower. How did I confirm this? With the CSD and then an entry model, which is the auto block after the CSD, and taking it to the high, taking it to the fair value gap. Not going way too high because I don't know where it's gonna end, but taking it to the most relevant or the closest what's it called? PD array or liquidity area of price, which is that fair value gap right here. But yeah, that's basically all. What you want to do is identify, identify the direction in the daily time frame. Uh, Once you identify it, it's super easy. Just go in the daily time frame and see where everything is moving. Find out the relevant levels in price that you want to see a reaction from. Then go into the hourly or the 4 hour, and there you look for the intraday profile to align itself with the higher time frame direction. If it doesn't do that, then you gotta wait. And if it does, and if it happens, and is trading away from a key level, that's when you want to look for your entry, right? So if you have the daily, if you have the profile or the confirmation of the bias, and then you have the entry, if the entry appears, then you're good to go. I think those have been the best trades that I have, or those are the best opportunity that I have found in the market when everything is aligned with the direction. Um, Basically, that's it. That's all I have. 16 minutes? Jesus, man.